By now you know the story that Africa's biggest private fixed income manager, FutureGrowth, did shock the market. It bruised the rand when it announced it would stop lending money to 6 state-owned entities until it got greater clarity on their longer-term strategies and what level of state intervention there was in those state-owned entities. The money manager citing concerns about how the SOEs are being run, government infighting, threats to the independence of the finance ministry, the Reserve Bank, the way banks are regulated, all of that noise coming together, loud cacophony of noise, and it scared FutureGrowth to the point where it put the brakes on lending. This is the MoneyMakers. I'm Bruce Whitfield. I'm joined this evening on Skype by Leslie Maasdorp, Vice President of the New Development Bank, to talk about the way that the Brics New Development Bank is not shying away from what others might not want to touch with a 10-foot pole. Leslie Maasdorp, there's a great hope that the New Development Bank is going to be the panacea to South Africa's ills. Have you got great big fat deep pockets to throw money at us?
Bruce, unfortunately not. Let me start out by maybe just giving one or two sentences about the New Development Bank, what it is and the role that it intends to play. Firstly, as you know, it's a multilateral bank. We have 5 essential clients or shareholders. These are the 5 governments of Brazil, Russia, India, China, and South Africa. So those 5 governments are the initial shareholders and members. So we have capital that we can lend to those 5 countries. The way a multilateral bank works essentially is you have paid-in capital, which is capital from the 5 shareholders, and then you have, as part of your capital structure, something called callable capital, which is capital which in the event of an emergency or contingency you have access to, right? And the bulk of your capital is actually in that domain of callable. So in the case of New Development Bank, we have $50 billion of subscribed capital. 10 billion of that is paid-in capital. So 2 billion each comes from the 5 members. They all own the bank in equal proportions. What then happens is that $10 billion is effectively invested in pretty safe, typically A or AA rated securities. And the real capital of the bank, the capital that you lend ultimately to clients, you raise through the bond markets, right? So we've just issued our first bond about a month ago for 3 billion renminbi, and we will continue to do bond issuances over the next while. And the way the bank makes its income, we on-lend the proceeds from the bond at a rate higher than the coupon or the interest we have to pay the bondholders. So in a nutshell, that's kind of how a multilateral development bank works. You keep your capital, you invest it safely in safe instruments, and then you raise capital from the debt capital markets, which you then make a return on.
You are therefore subject to the same constraints, to the same limitations as the rest of us are. The global financial system is interlinked and intertwined.
That is exactly right, Bruce. Firstly, we are an institution that operates on commercial principles, which means that when we lend to, let's say, a state-owned enterprise, let's take Eskom as an example. We made a loan to Eskom for $180 million, which we signed or which we concluded around the 15th of April this year. So firstly, the project has to make commercial sense, right? Ultimately, this is a bank, so we need to get our money back and also make a return, right? A modest return, but still a return. On top of that, Bruce, we expect in the first phase of our operation now, again, to retain a solid international credit rating. We also expect a sovereign guarantee. So the reason why we are more able to lend to a state-owned enterprise is firstly because these enterprises are 100% state-owned, right? The governments are our shareholders. But we have a sovereign guarantee attached to it, which, in addition to the credit risk analysis we make of the client, let's say it's Eskom or at SA or whichever client it might be, we also have that additional layer of protection where the state, the government, the treasury says we will make good should anything go wrong. So we assess the probability of default of every client, but in addition to that, we have that layer of comfort, if you like, for the bank.
Now, in a scenario where, for example, a state-owned enterprise in a place like South Africa struggled to raise money in the open market, it didn't like the rates it was being offered, or in the case like FutureGrowth, it withdrew funding to 6 state-owned enterprises because it was concerned about the risk to capital of furthering their investments into those businesses or the loans to those businesses. You would or would not have a different risk tolerance or a different risk profile in that particular case. You may lend for a bit. But if there are fundamental issues, you too, as the new development bank, might be put off at some point.
Absolutely. The key difference, as I just mentioned, is that in addition to the traditional credit risk assessment, which FutureGrowth and others, and we would undertake the very same due diligence of the project and of the enterprise, whether it's Transnet or Eskom, for example. As I said, in addition to that, we do have that additional layer of comfort. So governments don't typically default. It's very rare that governments default. It happens, and there are, a few historical examples of defaults, obviously, over the last, let's say, 30, 50 years that you can point to. But those are rare events. So we do have an additional comfort. And that is why multilateral banks like MDBs are typically very highly rated. They're highly rated because rating agencies have comfort that governments will step in should an entity, for example, fail to stick to the repayment schedule. So in our case, we are a new institution. We were established last year. We obtained a domestic AAA rating in the Chinese market where we are headquartered. And we're now on a path to obtain an international credit rating. Now, part of that international credit rating, the rating agencies will assess the quality of your loan book. If we, for example, have a number of enterprises and the credit risk assessment suggests that medium or longer term. Because remember, the type of loans that we advance are infrastructure-related loans, so they are long-term by definition. So it's either 8 or 10 or even 15 years. These are very long-term projects. So should the rating agency be of the view that a number of these enterprises have risky long-term profiles, that would also compromise the quality of our book, and it will therefore potentially negatively impact on the credit rating of the new development bank.
So therefore, you must be watching with as much interest as we are at home, just as to how the ratings agencies will treat South Africa in December. We were going along swimmingly. Everything was looking, if not shipshape, certainly okay for perhaps another pass in December. Then we had the Hawks investigation into Pravin Gordhan, the uncertainty as to whether the National Prosecuting Authority will or will not charge. And in the event that it does charge the finance minister with some level of misdemeanor from his days when he had oversight of SARS, should that happen and should he be removed from office, that might exacerbate South Africa's financial position. It could push us down to junk, and as a result would cause you, as the new development bank, to reassess your risk appetite for a market like this.
Look, let me say that the emerging markets as a whole, and certainly the Brics countries, starting with Brazil as well as Russia, who have already been downgraded, presents particular challenges at the current juncture. South Africa is certainly in that basket of countries, if you like, because we have a BBB minus sovereign rating with a negative outlook, which means that we are on the cusp of a potentially risky downgrade should the rating agencies come to that assessment. However, rating agencies look at much more deeper structural variables, right? So the South African economy is not growing at the moment, or it's slightly growing at probably 0.3 or 4% this year. They want to see the structural reforms that the South African government are undertaking and committed to ensure that the productive potential of the economy over the next few years is unleashed in order for growth to be restored. I mean, obviously, the noise and instability around the issues that you've just flagged, that is clearly a variable. But there are also some more deep-seated variables which they analyze, and that's got to do with whether the country is addressing its debt ratios, its deficit, sort of opening up the building, for example, energy capacity to ensure that when commodity prices pick up again, that mining and energy-intensive industries can produce at optimum levels pre-crisis. So there are some other more deep-seated factors which count as much in that appraisal.
And certainly the medium-term budget policy statement being delivered at the end of October is going to be absolutely pivotal in setting the tone for ratings agencies from which to work. Either they're going to buy the very optimistic finance minister's patter on medium-term budget policy statement day, plus of course the roadshows that he will go on pre and post the medium-term budget policy statement. But it does feel as if we are skating particularly close to the edge of a downgrade precipice. What's your reading?
Look, I mean, I would say that, and again, I was fortunate to be at the G20 the last couple of days where President Zuma as well as Minister Gordon was, and all of the focus of all of the large economies are on these, as I said, much more kind of structural reforms. There's no question that the short-term indicators do not look very positive, right? However, I think it's so important to take a more medium-term set of lenses. So it's very important for South Africa right now, whilst we've got to deal with these short-term challenges, to signal where the government, what are the specific measures, and this has to be reflected in the medium-term budget policy statement. That's going to be a key driver of what the rating agencies will look at, because there you signal your medium-term funding plans. They will want to see in your medium-term expenditure framework, do you prioritize the right things, right? Do you, for example, readjust your spending profile towards the areas that are likely to grow the economy? So, it's important that the noise and the frictions, intra-government sort of tensions, that those issues have to be sorted out. There's no question about it. But I just wanted to signal to you that that's only part of the story. But as I said, emerging markets right now, we always look at ourselves as, being in the worst possible state. I have the benefit of sitting outside the country. I look closely at, obviously, the Brics economies, and looking at Russia right now, looking at Brazil in particular. They're certainly in a worse state than South Africa. Not that we have to lower the bar and, put a benchmark of, the sort of worst case scenarios. But the point I'm trying to make is that those economies, because of the dire straits they're in, they are, kind of taking 3 to 5 year lenses, because that is the only way that you can craft a sort of a way forward when you are in a crisis of the kind that we are in South Africa.
My thanks to you, Leslie Maasdorp, the Vice President of the New Development Bank, with us from Hong Kong tonight in a glowing hotel room. There'll be other thorny issues and difficult matters to discuss. We never dodge the difficult ones here on the MoneyMakers. Thank you very much for watching. For now, good night.